Good morning and good afternoon to all of you. It's a pleasure to be with you today. So my name is David Menashe. I run a consulting company called Archipel & Co, headquartered in Paris, working on social innovation. And I will have the pleasure to facilitate this panel with our panelists that I will introduce in a minute. Our panel is called Breaking Down the Silos, How to Unlock the Future of Financial Inclusion. And we would indeed like to discuss with you all the future of financial inclusion and one of the key frontiers of financial inclusion, which is insurance. We know how critical insurance is, both to face the ever-increasing number of natural risks, but also the day-to-day risks that we all face. And it is particularly critical for the billions of vulnerable people, those who live with less than $5 to $10 a day in emerging markets, but as well as I would say the poor and vulnerable people in mature markets. And vulnerability itself is somehow less than a situation than a risk. So we will be discussing that. Nevertheless, for this segment of the population, we know that inclusive insurance remains too often underutilized and continues somehow to be a nice to have. Hence the importance of democratizing innovative risk management tools and trying to provide better access to inclusive insurance. So the session we would like to have with you, first of all, to explore what the insurance industry and the financial inclusion, I would say, ecosystem could do to break down silos. And we will go back to this notion of silos and the silos that basically limit access to inclusive insurance. We will discuss different kinds of silos, the silos between environmental and social impact, the so-called E and S in the ESG sphere, but also the silos among the financial tools, credit, payment, savings, and insurance, and how to basically limit those silos to drive financial inclusion, but also the silos between public and private organizations. So first of all, we'll discuss a little bit those silos, and then we'd like to explore how the sector and the different players, public or private, can innovate to help low-income consumers worldwide. So in emerging, but also in mature markets, to develop resilience and to be better prepared to manage, once again, both extreme shocks as well as their everyday lives. So we're very happy to host our three great panelists. I'll introduce them in a minute. So Garance Vathès-Richard, she's the founder and CEO of AXA Emerging Customer. So within AXA, it's an entity, it's a business entity whose objective is to protect the lower and middle class and those and to try to close the insurance gap across emerging and mature markets. So she's an entrepreneur, and we'll get back to this notion of entrepreneurship and how to create and scale up solutions to better protect low-income consumers. We'll have Birgül Akman Zoon-Messler. She's the senior vice president at DenizBank. And she's Deniz Bank is one of the leading Turkish institutions, very innovative bank, and Birgül has been a very innovative, I would say, financial inclusion expert to basically better protect, especially farmers. So Birgül will be discussing that. And we have the pleasure to have Diogo Cruz. Diogo is working for the Central Bank of Brazil, and more specifically in the Department for Financial Citizenship Promotion. And Diogo is heading the division in charge of the financial literacy and financial inclusion research. So three panelists coming from AXA, DenizBank, and the Central Bank of Brazil. So as I was telling you, we would like to start by this notion of silos to be removed. And I like to start with you, Garance. So as the head of the AXA Emerging Customer, maybe discussing this notion of silos and maybe this first silos that we see a lot between environment and social. There is this notion of ESG, very mainstream, but we still have the feeling that the E and the S part are quite divided. So maybe we would like to have your perspective on how to better make those two dimensions interact, and how to create inclusive business solutions that reconcile the E and the S, if that's for you, Garance.
With pleasure, thank you. Hello, everyone. Well, I think everyone listening to the call is quite convinced that these are two notions, two types of risks, two situations. On the one hand, the situation where the consequences of climate change need to be addressed either through adaptation or mitigation. These are words that unfortunately are becoming one of the most part of the. I read somewhere that the word climate is becoming one of the 300 most commonly used words or something. There's a statistic on that that's quite amazing. And on the other hand, the situation where there is a form of vulnerability, either due to level of revenue, either due to occupation, often both as they're correlated, sometimes also due to health, and that both the situations, there is no reason to keep talking about them separately, right? And actually talking about them together mutually reinforces the way we can better address them as situations and as risks. I think that can all stem. We all know the importance of vocabulary, right? And in particular, when it comes to stimulating debate amongst certain organizations, players across the world, and then some of this, the outcomes of the ideas of these debates then become more concrete as ideas. And some often say, oh, all these organizations, G7, G20, V20, the different World Bank or other multilateral forums for debate, they don't take us anywhere, they're not useful, etc. They're actually quintessential because they actually set the scene. They set the scene for many things. They set the scene for what's important to be discussed at a level that's more operational between public policy makers and the private sector. They set the scene on vocabulary. They set the scene on the funds that are earmarked with a certain word, with a certain ambition. And so that's why I think that this silo is slowly being killed. It's not there yet, but it's like women's equality. The glass is still half, but it used to be half empty and now it's half full. Here in the same way, I think there has been a realization that the two need to be approached together as they are addressing both these situations linked to climate change and linked to social inequality and exclusion. They're the 2 feet of resilience. And the world is going towards acknowledging and contributing to ever stronger resilience on the part of every member of the world population, let's say. Some have more of the ingredients at their fingertips or at less at risk, but all of us are contributing at our personal and professional levels to driving resilience. And we need to completely stop saying we will address through the financial inclusion the resilience of certain communities by only protecting them against the consequences of climate change. Because by doing so, there's 2 problems. One, do we know if COVID is a consequence of climate change? At least I don't know anyone who's able to say that as a certainty, that's yes or no, this virus was the consequence of climate change. You have all these conspiracy theories, but when we get down to it, what's the answer to that? So if we only go in one direction, we will protect crops, land, assets, but we probably will not protect, or not enough, the human beings. And then if we go in the other direction and we only go for financial inclusion as well, weakening financial exclusion based on the vulnerability that is income and occupation, then we're not really taking care of the consequences of climate change. Both of them being ignored will not only weaken resilience, will also weaken the debate. We weaken the amount of money that's channeled from the public sector in particular, but not only, also the private sector, to driving resilience, and will also weaken overall the possibility of killing the silos between public and private. Because in this particular area, in my conviction, but I'm more than happy to be challenged, and maybe it's a bit too black and white. In my conviction, killing most silos is the quintessential solution to inclusion, but it can only happen if you start by killing the silo between environmental and social, because that will lead to helping you kill the silo between public and private. Even more, kill the silo between intrapreneur and entrepreneur. Even more, kill the silo between those that believe that they're only concerned by one of the two. So a lot of people, well, we're all concerned by climate change, right? Many less people feel that they're concerned by social exclusion. And I don't think a lot of people realize that it is at our doorstep. If you think about it, if you go to the same place every summer, and I'm going to finish with this, if you go to the same place every summer, the same spot on the same beach as when you were a child, how many of you have said, you know, I used to always come here with my grandmother at this time. It's much hotter now than it was then. Let's go later. That's one thing, right? We're all feeling it. It's part of our daily lives. 10 years ago, we didn't know anyone that was in a vulnerable situation from a revenue point of view, at least not in the Occidental world. And even in the emerging world, it's like, you know, we were all in our circles of people and we heard about it, we saw it. If we're like Diogo and we work for the central bank, we see it very closely. If we're like Birgül and we work for Dennis Bank, who from the beginning decided to address this due to her particular situation, yes, she saw it, but fundamentally, it wasn't that close to us. Today, we all have a cousin, a colleague whose son, whatever it is, who is in a financially vulnerable situation. It's touching us, it's becoming closer and closer. And probably one of the things that we need to do to be able to kill this particular silo is to make it more concrete. Because on climate, the consequences of climate change, the enemy is very concrete. The enemy is the emissions of CO2. The enemy, and I'm just caricaturing, but it is Total, Shell, what have you, right? And how we can help them in their transformation, because they are transforming. This was their job in the beginning. What do you do when all of a sudden your job becomes public enemy number one? You have to transform and be helped by everybody else. But that's the enemy. What's the enemy on social inclusion? How can you measure it? How can you touch that enemy? It's social inequality. It's financial volatility. It's geopolitical instability. How do you measure that? And that's going to be part of the answer to killing, I think, the silos and to really accelerating on resilience, be it in the mature emerging worlds, be it for rich or poor.
Thank you, Gareth. We'll go back to some of the innovative solutions that you are creating in a moment. But I'd like to keep on exploring a little bit those silos. And Gareth has mentioned this notion of going beyond protecting assets and the importance, of course, of protecting people and the importance of being, I would say, as customer-centric as possible. So I'd like Birgül to have a little bit your perspective on how to be as customer-centric as possible and to go into this silo, I would say, within the financial inclusion itself. My intuition, and it's not only mine, discussing with people, you know, like Gareth, is like sometimes, and maybe too often, financial inclusion is a sequence. So, you know, starting maybe with payment and then credit and then savings and then insurance at the end, but like a sequence of you know, box to be ticked before going to the other box. But basically, if you look at the customer needs, maybe it's not a sequence, but more like a square. But I'd like to discuss with you and to have your perspective on this notion of sequence versus square, and especially this how to be customer centric, to break silos within the financial inclusion, and maybe a little bit how at DenizBank you achieved to be as customer centric as possible to properly understand the livelihoods of lower income household, and especially farmers. So customer centricity, financial inclusion, not as a sequence, but as a square, and this notion of silos to be broken by being more customer centric.
Thank you. Thank you, David. I think to remove the silos, maybe first of all, we should focus on the, as you mentioned, the customer-centric side. We need an integrated approach. As Grant mentioned, I think the major enemy is our thoughts. So all the partners, public, private, financial system actors, insurance system actors, we should all focus on one thing. It is to be customer-centric. What I mean by customer-centric, it's not only a standard marketing word. Here, what I'm trying to say is that, for example, I am an expert in agriculture side, so my famous segment and my major segment is rural area and the farmers in that area. So maybe we should ask the question like this. We are trying to include the farmers. We already achieved it in Turkey and in DenizBank. We are trying to include the farmers in the financial system, but the question I think should be this: why aren't they? Why they were not excluded? They were excluded in previous times. So what was the reasons behind this? I think just based on our case, we started agricultural banking activity at the beginning of 2000s with the legacy we took from Tarish Bank, which was a cooperative bank. I'm talking about this because we know that the transfer and the transfer of the know-how in agriculture was critical at that sense. We transferred not only the system or the know-how, etc., but also we transferred the people at that time. We transferred the people in the fields who speaks the same language in that rural area. So as a white-collar person, if I go to a village that I don't know, it's not meaningful if I do not live with them, if I do not participate to their funerals or to their wedding ceremonies, etc. So they have a harvest time, and our journey started with providing a solution to that side. They were underbanked at the beginning of 2000s in Turkey. There was only one state bank servicing to the rural area and farmer segment. But at the beginning of 2000s again, we understood that all the financial products, and of course all the bundled products in addition to financial services, are designed not in accordance with the needs of the customers. To illustrate, they have a harvest time, they have some crops, they have a revenue only on a yearly basis. But as the banking financial system actors, or even for the social security premiums and insurance premiums and everything, at those times, all the financial instruments were provided in a monthly period basis. So they couldn't pay on a monthly basis. The story started with that one. That was one of the, I think, most important thing. But of course, that was the starting point. Afterwards, we had a very dedicated sales network. And they were experts, not in only financial instruments, but also in agriculture. They were agricultural engineers mostly. So when there was a flood in that village, they are still in that greenhouse before the customer goes there. So they live the same problems. They confront the same problems. They have also some farming activities, etc. So I think it was important, and what we understood at those times was that they were not serviced in a very high quality. What I mean here is that not very luxury branches. So they wanted to feel comfortable in our branch. So we designed the branch concept in accordance with their social lives. Of course, they were very well designed, but at the end, they were feeling comfortable. They were not hesitating to come to branch. They instead came to our branch to take some tea and talk with our financial advisors and portfolio managers And they did not talk only about financial instruments, but also their risks, their other entrepreneurship activities. They provide, our sales network provided 7 days, 24 hours, free advisory services to them. So it was also a need. And we are talking, especially in terms of emerging customers and also in terms of farmers and rural area, we are talking about a very conservative sociological geography. So every news is transferred via mouth to mouth. So maybe one of the a local radio advertising is more valuable than a very high budgeted television advertising. So we really need to understand the customer need. And last but not least, I should also add the partnership side. The service should be sustainable. So if you are with the customer, especially for this emerging customer segment, if you are with the customer only one day, and in the next service period, for example, there is seasonality, we are talking about sustainability issues, climate change, etc. We should be with the customer, next to customer in also bad days. So the sustainable service using data analytics and risk monitoring services is also very critical. If we take a decision just to enter to that segment, then it should be sustainable. I think it's also very critical. At the end, I will say that inclusive business solutions require deep full customer insights, and they are really very rural. So we should hire a correct sales network just to understand them. Thank you.
Thank you very much. Thank you very much, Birgit, for this very, also very concrete example and illustration. There is already one question. So maybe before, going into silos between public and private, if that's okay, Garant, there's a question for you. So that's because it's ongoing question. So I'll just share the question now, and either you respond right now, we can take a minute. If you want to take a minute, please. But the question, I'm going to read it to you. Given the necessity to bring together E and S, are there today available insurance products for small farmers to transition to a climate resilient / regenerative agriculture and reduce their CO2 emissions, hence allowing for fast-moving consumer good value chains to be decarbonized? The transition is risky for farmers, yet we expect they shoulder the risks and the cash flow reduction during the transition. It seems there is a wonderful role for insurance there. So basically, a bit of if you want to address now this question, Garance, about the concrete example to basically bring together ENS as far as farmers are concerned.
Yes, we can go back to it, but in a way, the question, which I think is a really interesting one, isn't really about either killing the silos between ENS. It's about how to contribute to, not in a defensive way, the resilience of smallholder farmers, but in a proactive way. Because it doesn't, they're not, let's say, exposed to the consequences of climate change due to the fact that their agriculture is not regenerative, to the fact that their agriculture emits greenhouse gases, right? This is a consequence for those, as the person says, in the FMCG value chain, who are buying these products from a chain, which are produced from a chain which is not decarbonized. So that's a really interesting question. It's just not about killing the silos between ENS, but it is about creating more resilience, right? And so to answer just this specific part of the question, I'm not sure insurance is the right financial tool for this, because this is, although essential, we know it's risky. We know the risk, and it's not really a risk, it's a certitude. It is a certitude that this will increase the uncertainty around revenue. It is a certitude that in the beginning, it will mean less revenue. It is a certitude, as the person says, that cash flow will be reduced during the transition. Whereas the characteristic of insurance is to cover risk, which is by definition uncertain. And so this is, to me, when, and really, again, thank you for the question. When, David, you referenced, and Birgül, I think you answered part of that question well, very well, on the role of each financial service and this tendency of sequencing credit and then savings and then digital payments to then go to insurance, and where we're fighting to say it's a square, it's all together. Some people will need to start with savings, some with credit, some will really need to access digital payments. All of this is sustainable thanks to insurance. So it's not 1, 2, 3, 4, but together, right? And each one will have its different equilibrium. In this particular case, what's clear is that it has to start with credit. What's clear is that it has to start with investments and digital payments, etc. And it's those investments on a certain part of it that we can say, if they're taking out themselves alone to be able to transition to something that's much more climate resilient and regenerative, there we can add insurance. But it's adding insurance, it's protecting against the default on the loan, because there it's an unknown situation and it's a risk. It's not protecting against the actual cash flow reduction during the transition that is a certitude. So I would answer that. I would answer it. It's not really as much ENS as it is an essential topic on decarbonization, and one where insurance can play a role with regards to how the money is allocated on the loan, rather than the actual reduction in cash flow over a certain amount of years. But I don't know if we can go back to it.
Yeah, but thank you. Yeah, thank you, Garance, and just so please don't hesitate to put your questions on the discussion platform, and
yeah, thank you
of
very
course
much.
we'll open the floor in a minute, but please don't hesitate to write your questions so that we can address them across all along the panel. Diogo, I'd like to discuss now with you a little bit about enabling environments and the dialogue between public and private sphere. Birgül and Garance are coming from the private sector, DenizBank and AXA, but we know how important is the dialogue with the not only decision makers but more generally speaking, I would say an enabling environment. So I'd like to have your perspective on the potential silos that might exist between public and private organizations to keep on exploring those silos, and how basically to foster dialogue between the two spheres, and from a central bank point of view. Diogo.
Okay, great. Thank you, David. Well, happy to be here. So I think a problem might be the unwillingness to cooperate when we talk about regulators and the industry. There may seem to be different objectives, but I guess to remove the frictions, both must engage thinking about the benefits of, for example, like I'm the central bank, for example, as a stable and healthy financial system with citizens included financially. I would say this is good for both the public sector and the private sector, right? So I believe the more than formal mechanisms for broad collaboration, what is important is practical engagement for smaller or specific projects where you can really see the benefits for both sides. So our department here in the central bank, as you said, it's a department for financial citizenship promotion. We work promoting financial citizenship, which includes financial inclusion, financial education, financial consumer protection. So we work through the engagement with both public and other private institutions, basically. So I can mention here a few projects like we have a financial education project for public schools. We have a partnership with the Banks Federation in a measurement of financial health index. And in this partnership also, we have a partnership in a financial education platform. So other examples, we have a memorandum of understanding with, for example, an agency that fosters entrepreneurship, that supports small businesses. So we want to be closer to those small businesses. That's a way, by partnering with those institutions that are really closer to them. So still thinking about the central bank side, financial regulator, I think it's important to foster the dialogue with the financial sector industry. And we've been doing that a lot, especially with to foster innovation and foster competitiveness. So as an example here of innovation, 3 years ago, we launched our instant payment system, so-called PIX. So that was a process that had a very participative governance. So since the beginning, it was created a forum with technical working groups with the participation of the payments and financial industry. And really, at the end of the day, what we wanted, and what I think is important, is to ensure that, for example, the design of the service really meets the user's needs, right? That's what we really wanted to, as Birgir said, we really wanted to be customer-centric. We really want to understand the customer, so we could develop the payment system. Similar, we have engagement in terms of our open finance initiative, in great engagement with the industry, and just one more example in terms of innovation facilitators. Here in the central bank, we have a regulatory sandbox. So we select projects that institutions want to innovate, maybe a specific project. So we kind of follow these projects closely, and all of the time thinking about financial inclusion, how can this impact on customers and these kind of things. So we also have a financial and technology innovation lab, and with this project we engage with innovators and the academia, with society at large, with the objective of fostering innovation. Kind of works as an innovation office. We provide guidance to innovators about the regulatory framework. And what I mean is that it's really important to be, engaging with the institutions, with institutions that really want to promote innovation, and engaging, really thinking about the impacts of course, the impacts of financial stability, but also impacts in terms of the customers. So yes, we believe the collaboration among public and private sector is key to achieve our end goal. And I mean, our end goal, it is financial inclusion, but it is also the outcomes of financial inclusion that we really want to make sure they're positive. And for example, thinking about here financial health, financial well-being as an outcome of financial inclusion. And even the mission of the Central Bank of Brazil, one of the mission includes to ensure well-being of the population. So that's how we want to work and to achieve that.
Thank you very much, Diogo. Thank you so much. We've been discussing those silos, ENS, financial, among financial inclusion itself, between public and private, and we've started discussing a bit of innovative practices. Diogo, you just mentioned instant payment. Birgir, you have mentioned a little bit how you've started to better protect farmers, but I'd like to go one step beyond and ask you, maybe each of you, and then we'll open the floor to questions. So don't hesitate, by the way, to start putting your question on the chat. But before opening the floor, I'd like to ask each of you maybe one example or one innovative practice that, according to you, is really illustrating the way on how to enhance financial inclusion, and especially inclusive insurance for you, Garance. But maybe we'll start with you, Garance. Could you share a little bit one solution that to you illustrates good practices or best practices, and basically how to scale it? Garance, if that's okay.
Yes. I'm thinking about what my best answer could be.
Or two. You know, if you want to mention two, so that you don't have to pick one.
That's the most relevant. I think either we go for something innovative linked to the actual product, and there we have examples of killing silos between ENS, of killing silos between the product and the service, of taking into account that even more than for more affluent customers, these are customers that can't take the risk of X amount of dollars being thrown through the window, even if it's $5. And so what's difficult is that insurance is not tangible immediately. And so how can we make this more tangible immediately? And so kill the silos again between services and products. And we can also illustrate killing with an innovative approach linked to partnerships, right? Partnerships, because we know that we can't do this alone. There is no single company or no single industry that can even slightly move the cursor on its own when it comes to inclusive finance. Inclusion in general, I would say digital inclusion, health inclusion, education inclusion are the biggest usual suspects, right? But no one can do it on their own. And I would say that what can be very innovative is bringing together the private sector with the public sector, with the nonprofit sector. And there are different ways of doing this, but I think one of the most telling examples is when you're able to, with the agreement or alignment of the government, because it's very important to always go through governments when you're looking to do something quite big that looks at a whole sector, etc. But with their acknowledgement that at this stage, what they can do is open doors and help you speak amongst yourselves in the private sector. So with the agreement of the government, with a role in some circumstances of NGOs who are closer to the field, who know these communities much better than we do, who know what are the local channels through which to go, etc., to get together amongst private players. So if I take the example of a cosmetics company who is dependent on raw material that's only produced in one particular country, is this material, and I know Birgül, you have examples like this also, is this material raw material jasmine? Is it some kind of butter? Is it some kind of plant? Is it thyme or whatever it is that we put in cosmetics, right? And they need to protect that raw material. And to protect that raw material, they need to protect the crop and protect the farmers who produce it, right? And so in most countries, and it's true that we have a few examples where it works very, very well. Example, India being a case in point. In most countries, agricultural insurance is extremely heavily subsidized. Extremely. That's the first problem. So it's unsustainable, so to speak, right? It's almost philanthropic at this level. And also the second pain point is that the last mile distribution, right? And again, I say this time and time again, and I think that it's true also for you, Birgül, to a certain extent. This last mile distribution is really a huge pain point, because whether you own networks or not, whether you own networks and partner with other people who have big networks, this last mile is very important, right? And so that's another pain point. And an innovative approach we've had is to work in an African country with the agreement of the government, who is actually looking to see how they can improve their own approach to agricultural insurance by looking at how this works, with another private sector company that is very dependent on a certain kind of raw material. We work with them to produce a bundled insurance product, which covers their land, which covers their crops, and which covers them. Which means that for the cosmetics company, they feel more secure in terms of the production that they can forecast on for their sales, etc. These people feel much more secure that they're protected with their life on personal accident, on their health, but also their crops through parametric agricultural insurance. So there's alignment there, right, between the company, and there's obviously alignment with us. And then there's alignment with the government, because the government feels like this subsidization, complicated problem where they have to subsidize premiums, etc. They're not expected to do it, so they're more ready to contribute to developing infrastructure that facilitates the last mile, possibly helping measure impact, etc., etc. So I would say I could give examples on very innovative products in the detail of the insurance products. I could give examples on very innovative distribution channels, etc. I think this type of innovation is really at the crux of killing the silos across the product, the partners, the channels, the public, the private sector, but more importantly, shows the importance of really innovating between actors. And that's a really hard part. Honestly, it's really hard. I would say it's the hardest part because all of the other barriers, and I don't know if my fellow panelists will agree, all of the other barriers are internal. Because you have to adapt the processes and the products, etc. Externally, it's about the partnerships and how you distribute together and you find a common interest. And that is really an area where I really am convinced that we have to concentrate more and more, and it will only get unlocked if the top agrees to unlock everything.
Thank you, Gareth. Thank you for that. We have a couple of questions, but what I suggest is just to keep them just after Birgül and Diogo have a little bit share their maybe one or two examples. Birgül, you have started to explain how important it was for DenizBank to basically understand properly farmers, to provide not only adapted products but also products and services that address the comfort and are basically well adapted to also aspirations of people and their livelihoods. Maybe I'd like to ask you to dig a little bit deeper in what DenizBank has done, especially on the farmer side, and maybe if you want to react on Gareth's point on last mile distribution and on partnership and on ecosystem, but maybe to have more, and I know how DenizBank has been innovative on that side. So maybe to have your one example or one best practice that you would like to share with us.
Yes, I have a lot to say, and I am very excited just to come here in a financial inclusion week. So I think this is just the appropriate topic for us also. Maybe I should start. I will just give the highlights. If someone is more interested, maybe we can answer in the Q&A session. But I should start with this one. We all need food. We all need sustainability in terms of environmental and social effects. So we all have to support the farmers and cultivation and agriculture, because we cannot live without food. So you asked about an innovative product. Again, I will illustrate. It's easier to talk about it. We designed producer card when we started agricultural banking activity. And to be honest, I can say that at the beginning of 2000s, before we started agricultural banking, this segment was only taking service from state bank, only one state bank. I think we have a lot of friends from other countries also. I know that more or less the situation is same in other countries, in emerging countries, or in similar farmer profile. And as I mentioned in the first part, I think sustainable and continuous support of management and also continuous support of the organization is very critical. If you are with the farmer or with the emerging customer segment you are dealing with one day and not with that segment another day, then you cannot continue that activity. So for this one, we are not state organizations, so we have to measure the risks. So we should use the data analytics. I think find all successes, there's the measure underlying issue is data analytics. So we are very lucky that in Turkey we have a farmer registry system, and we have a research and development department and a dedicated loans department. So in 1 second, with only one citizenship number, we can calculate how much money, how much loan should be granted to a customer, to a farmer. What is the investment loan amount and what is the expenditure. And based on this fully automated and digital environment and very reliable data, we designed our product, which is Producer Card. Producer Card is the first commercial card which is in Turkey, which is designed specifically for the needs of the customer. Just as a main sentence, I can say that it's like a key. If the farmer takes that card, and throughout the year, it's paid on a yearly basis, but we rely on our system, so we measure the risks accordingly. We grant the correct limits to the customer, so they pay back only once at harvest time. And this is the hook product in Denizbank. So if the customer takes this, they can buy their fertilizer in the in our partners, which are merchants, fertilizer companies, energy companies, etc., or they can withdraw cash, etc. Since Producer Card is the hook product, and I can say that almost we have approximately 1.6 million farmers, and in Turkey there are 2 million farmers that are registered. So it's a very huge penetration rate in agriculture. And all of the financial solutions and also insurance solutions are embedded in this card. Of course, we have some different products, but I will talk about Producer Card here. And Garant maybe did not mention, but I can mention also an innovative product that we came together with AXA, Denizbank, and also using the government tools, public-private partnership. It's a typical, and it was a hard case, but we achieved it. The name of the product is Farmer Health is Okay. That means the state requires social security premium payments on a monthly basis. This is an AXA product, and the sales channel is Denizbank branch. So it's provided to farmers. So the farmer, as Denizbank, we pay on behalf of the customer for this insurance premium. The farmer pays back this insurance amount at harvest time, and throughout the year, the customer, by this opportunity, the customer pays the social security premiums to the state, and also the customer takes a qualified service, private, if he chooses qualified service from private hospitals also. Again, what is important? Food is important, farmers are important, and cultivation is important. So their health is also important for us. So this was one of the typical examples. If you ask me one innovative product, it would be for sure Producer Card. And also I should mention the digital side. Maybe we talk about older customers in farmer segments in most of the countries, but maybe as a misunderstanding, we can think that they are far away from digital. No, just opposite. We are a very penetrated bank in terms of branch network also to the agriculture, but even we have a lot of branches, they are still far away from city centers and far away from districts. So they always need digital. The total success and the key to success is to understand the customer. How should we bundle the products, insurance products, financial solutions all together, and how should we communicate with the customer? We refer to a social anthropology study here. Apart from our sales network and their feedbacks, we had also a professional academic study just to understand and find the tools to communicate to these segments the digital solutions. We have the Denizbank Toprağı mobile app, and it's a rewarded app. Its aim is not a financial inclusion. Its aim is just to support the farmers and support the farmers in terms of cultivation methods. Just to illustrate, 7 days, 24 hours, even they are not Denizbank customers.
And Birgül, I have to ask you. Yeah, I'm so sorry. I have to ask you.
Yes, please.
Because I see time is running a little bit. I have to ask you to finish,
yes,
so that we have time to have some questions. Yeah.
Okay.
Sorry for
the
that.
last one, 7 days, 24 hours via that app. application, they can ask free to the agricultural engineer all kind of questions. So it's not servicing only in terms of financial needs, but in terms of the advisory services also. Thank you.
So David, I think you're going to kill me, but I need to add 1 minute on what Birgül has said.
Please, and then Diogo will yeah,
because
absolutely. Please go ahead.
Because Birgül had only a few minutes, but what DenizBank in general and Birgül in particular have done for the agricultural world in Turkey is completely unique. And when I went there, it blew my mind in the sense that they found a solution where they said, we don't need a card for the producer card she's talking about. We wouldn't need it really, but people need to touch something, right? It's like Amex, don't leave home without it. This is the Turkish agricultural farmers Amex, don't leave home without it. On it is all their information. All their information. On it is the number they can call to get agricultural engineer advice. On it is how much they have left to be able to buy in certain shops, the fertilizer, etc. And it's also in this way, changing behavior and directing loans that they take out to buy specific productive assets that stop them from buying anything else, but this is better for them. And that's why DenizBank is also able to offer the interest rates it offers. It is completely innovative, and it is only due to insights. It is only due to behavioral economics, to anthropology, to them having taken more time, having gone more slowly to go faster. And you will not find this anywhere else. This idea of this card is just like, I was hearing testimonials of these farmers that went all the way to their land. They realized they had forgotten their card at home. They went all the way back, even though they didn't really need it during their day. This is their way, this is the trust umbilical cord. And they don't leave home without it. So, and then I also want to say that they created an
Garance, I was trying to, because I think we lost you, Garance. Because I was thinking it was me, but I think basically it's I think it was you. I don't know. Birgül and Diogo, can you hear us?
I couldn't
Yes.
hear her too. I can hear it, David, but I couldn't
okay.
hear Garance. Yeah.
Yes, we couldn't hear Garance, but you, David.
Okay, so yeah, sorry, because I thought it was me, but basically I think it was the three of us. So maybe I don't know. I hope Garance maybe can go back. But Diogo, I'd like to ask you on the same, and on the same notion of innovative practice. If you have already mentioned this notion of instant payment, so if you want to elaborate on another example, please. But otherwise, we also had some specific questions for you, so that we can also start with the question. So one question was, open banking in Brazil is extending to insurance. What impact do you expect this to have on low-income consumers? And maybe also there was maybe one question, I don't know if you want to take it, and maybe Birgül, if you want also to comment. As we think of breaking silos, would you also touch on the challenges of regulatory and policy silos? And are there examples of markets where these silos have been addressed? So the question of specific to open banking in Brazil extended to insurance, and maybe if you think of other markets where these silos have been addressed. And if you want, we have just a couple of minutes. If you have another example that you would like to share. And
okay,
sorry
do you want me to start answering the question? I guess so, right? And then
absolutely.
I guess we're running out of time, but okay.
Absolutely.
In terms of the
maybe
open,
starting with the question, absolutely.
Okay, in terms of the open finance question, this is a very, very interesting question. Yeah, open finance in Brazil is evolving. I mean, people still getting used to and getting to trust, open finance in terms of it has a lot of potential in terms of, okay, you can share your data to other institutions under your consent, and that will allow competition, that will allow for institutions to offer you to get to know you better, to decrease information asymmetry, and to offer you maybe more suitable products. And I guess we have to make sure that the products are suitable, and kind of open finance kind of has the potential for that. And I would say not only insurance, and I think insurance as well, but also other types like credit, for example, too. All these tools can be benefited of the open finance initiative. And yes, open finance in Brazil, I think it's next year, the open finance is already evolving in Brazil, but I think insurance is coming to the initiative next year. So do you want to come back to the other question? Do you want me to talk about the example? I mean, I guess we just have 5 minutes.
Absolutely. I think if you can take maybe 2 minutes, that would be, I think that would be
I'll just try to go very quick. I mean, when we're talking about, breaking silos and thinking about not only insurance, but the other financial tools, I talked a little bit about payments, but I think this is a very good example in Brazil. And that allows also for the other tools to come together, as we are discussing here, not a sequence, but, as a square. The instant payment in Brazil, I mean, I'll try to be very quick, but it's been a huge success. It really is spurred financial inclusion. So, I mean, we had the problem before that the transactions were expensive to make. So even for people that had an account, we're seeing the trend of access increasing, but we knew that usage was not. Like, people are going to the bank branch or to the ATM and once a month and just withdrawing all their cash. So that kind of changed after Pix. So it's easy to use. It's 24/7. It's free of charge, which is important for natural person. So, like today, 80% of the Brazilian population is either receive or send instant payments, and 71 million people in Brazil who use Pix had not used any kind of digital financial transaction before. So it's not a substitute of other digital transactions. It's really spurred financial inclusion. And for that, when we talk about the other tools, I mean, I think using digital transactions can establish better relationships among customers and financial institutions, and this could lead to offer. The institutions will get to know you better. You have you have your data there, and that can allow the institutions to offer you other types of products, like credit and even insurance, I would say. So that's basically very quickly the example that I could share with you. I know we just have 2 minutes, so.
Yeah, thank you very much. Thank you very much, Diogo. There is one question that I haven't read yet. It's about embedded insurance. I don't know if Garance, you can hear us correctly and if you can speak. Otherwise, I don't know if Birgül or Diogo want to address the question. But do you think embedded insurance offered via digital platforms? Birgül, you were mentioning about digital savviness, especially also for elderly people. So do you think embedded insurance offered via digital platforms could bridge some of these silos and integrate insurance more seamlessly into consumers' digital lives? I don't know, Garance, if you have found back your voice. Let's try. No, okay. No, it doesn't work. So maybe, Birgül, you have mentioned digital technology as a key lever to enhance financial inclusion, if you want to take this question.
Yes, please. In the second round, Garance also mentioned about the state-subsidized insurances in farm. Garance, are you okay? Is it okay?
Yeah, she cannot speak.
No. You can still continue.
Now we can hear you.
No, now we can hear you.
Okay, Birgül, please, go ahead.
But we have only 20 seconds now, 30 seconds. Yeah.
So I can say that state subsidizes the farmers' insurances in most of the cases, but also we talked about this issue a lot with Garance. It's important just to bring together the health side, the farmer cultivation protection side, and also the customers' health side, and the servicing model via digital or by face-to-face. We should understand the customer again. It can change from one rural area to another. It should be different in location basis, I think.
Okay. Thank you so much. I think we arrived to the end of our panel. Sorry for this moment of where we kind of lost our voice, but thank you so much to the three of you. I hope it was very insightful for the audience. the importance, of course, of breaking silos. I think we've been discussing that a lot, but also to be as customer-centric as possible, to start with understanding not only the needs, but also the aspiration, of course, the enabling environment. And thank you, Diogo, for giving us a lot of perspective on how to basically make work the public sphere with private partners. So thank you so much for this, for the three of you on how to basically enhance inclusive insurance.
And thank you, David, if you
so
can
much.
hear me, for a great facilitation.
Yep.
Thank you.
Thank you very much, David.
We can hear you.
Very
Thank
good.
you,
Thank you
Diogo.
very
Thank
much.
you, Birgit.
Thank you, everyone.
And thank you, Garance.
Thank you very much.
Thank you
Bye-bye.
to all of you. Bye-bye.
Bye-bye.
Bye.